The reason that nobody wants to buy Bitcoin when it's down is because they don't understand it. They want to buy it when it's going up because there's returns, there's money to be made. But when it's going down, there is no cash flow. There's no understanding of what it is. So how would you get a person that doesn't understand it to buy it when it's low because it's cheap? Because they won't think of it as cheap. They'll just think of it as worthless.
Do you think that it is viable and a good thing for Bitcoin to become the base layer, not just a component of it? Because right now I would argue real estate and gold are kind of the most monetized and debt assets out there.
I see a mix. I really do. I think gold, real estate, and Bitcoin all have a role to play.
Welcome back to Hosting Bitcoin, where we have the opportunity to explore the people, the principles, and the paradigm shifts that shape the future of money, sovereignty, and global systems. Today, our guest is someone who's spent years helping people understand not just Bitcoin, but money itself. Nik Bhatia is a financial researcher, professor, and author known for his groundbreaking work on the global monetary system, including books like Layered Money, Bitcoin Age, and the Bitcoin Layer. His ability to connect the dots between central banking, treasury markets, dollar liquidity, monetary history, and Bitcoin has made him one of the most respected thinkers in the space. But what makes Nik's work unique is that he doesn't just explain markets, he explains everything behind them and underneath them. And he gives us a lens into the invisible architecture beneath modern finance and the incentives that shape the world around us. Today, we're diving into money, trust, technology, civilization itself, Bitcoin, AI, and what the future might look like when global systems begin to reorganize around new forms of coordination. Nik, welcome to Hosting Bitcoin. Thanks for joining me.
Beau, thanks for having me.
You know, one of the joys and privileges of doing a podcast is sometimes you get the chance to talk to someone who's been very influential on your own journey and ask the questions that, at least at the time for me, I had no conception that I'd ever get a chance to talk to you. So this is a really cool experience. And for the people that aren't familiar with you, I would love to start with just sort of like a little bit of your backstory, maybe how you came to Bitcoin, sort of what's unique about the way that you've approached getting into this space, just so that we can set context for people. And then I'd love to dive in deeper.
Yeah, I'm a finance student. I love history, and you ask a question that will make me go back to when I was, a kid, and I remember being really interested in why currencies moved up and down. So the background there is that I was born and raised in California in the United States. I'm of Indian descent. Both of my parents were born in India. My mom's whole family was there and is still there. And so I went to India a lot as a kid. And this is the TMI of it all. There is no direct flight from Los Angeles to New Delhi. There hasn't been one my entire life on this planet. And so you're forced to fly through somewhere. And by God's grace, I was very lucky to see different parts of the world, both Europe and Asia, because you can go both ways, and the flight times end up being pretty equal. That's a long way to say that I've always been interested in global macro, global news, geopolitics, international trade, how the world works, power dynamics, and all of these things. And so it led me into a career in interest rates. Interest rates are the dominant factor in a foreign exchange currency parity. And that's my background, where I come from and what interests me. So when I met Bitcoin formally in 2016, it clicked immediately, and it was something that I knew. I recognized my obsession early because it fit into all of these power and global macro dynamics that I'm interested in. And from there, the rest is history. But I think that, the fact that I was interested in gold before Bitcoin, that I had heard of Bitcoin but never taken a dive. Those are smaller parts of the story. And the larger part of the story is that I just really care how the world works.
Hmm. I think that's probably the most unique thing that I believe you offer. And to use the analogy, we talk about financial plumbing all the time. And to use a plumbing analogy, you're pretty happy when your plumbing works. And most people don't understand how plumbing actually works underneath what you see on the surface. And I think that's a similar relationship with the concept of money is. We all use it, we all understand it, we get utility out of it. But when it comes to understanding how it works internally, or even more importantly, how it breaks down and the reasons that it doesn't work, that's the unexamined area that Bitcoiners are at least familiar with, but I think you have a really unique view into. And what I'd love to ask you is, what are the things people don't understand about the way the financial plumbing actually works or doesn't work that makes Bitcoin such a unique invention or discovery in financial terms?
The quantity is one. I think the quantity of money, the quantity of assets, the quantity of funds, the quantity of cash instruments, the quantity of total non-cash instrument assets, fixed income assets. That's some of the stuff that I think is pivotal to my understanding of Bitcoin's value, is how much is out there, how much is flowing around all the time, and how much is chasing one basis point here or there. The overall stock of wealth, both in liquid and non-liquid forms, it is in the $1 quadrillion range, and most people can't even conceptualize $1 billion, let alone $1 trillion. And so what makes what makes me unique, I've traded $1 billion treasury trade multiple times in my life. I've managed a book of $25 billion of treasuries. I have seen the Fed move trillions of dollars in and out of money markets multiple times in my career. And the size of the stock and the size of the flow are blinding and almost incomprehensible to people that haven't seen it. Like, I remember, like it was yesterday, doing my first $9 million trade. I was buying like a 1 month T-bill, but $9 million. And I was shaking. Like I couldn't click the button because I was the fiduciary, and the head of the trading floor. He had a famous saying, like, if you mess up, that's fine. Like, you can mess up once and we'll maybe work it out. We might have to write a check to the client, but like, we'll get through it. If you mess up and it was an avoidable error, or you try to hide your mistake in any way, shape, or form, don't even bother coming in the next morning. And that's the pressure that you face on the floor. Don't mess up. Don't make a mistake. This is it's not our money. It's not your money. It's other people's money. So you can't mess up. And if you do, you have to send them a check. And if you do and you don't like admit it right away, you're fired. Like, don't even come in tomorrow. So I remember shaking for that first $9 million trade. But then, a year later, I'm picking up the phone and buying $1 billion from Nomura of 3-year notes or 5-year notes. And it happens in 5 seconds. The trade is done. The math took me 3 hours to check beforehand, but I did the work. And so when I'm ready to lift $1 billion of treasuries, it can happen quickly. So that the awareness of that size and how big the world of money is. Bitcoin was 20 billion in market cap at the time that I got promoted to start running a book of $20 billion of treasuries, around that time. And the relative size of Bitcoin to the rest of the world, I don't think that I was ever able to unsee that.
That sense of scale is, I mean, one part, because $1 billion is a lot of money to most people walking the earth. And in the scope of the actual money market or just total global liquidity, that is infinitesimally small. And so the scale is something people don't understand, but I also don't think people understand the internals, right? There's a lot of people that walk around who still believe that you can go redeem a US dollar bill for some amount of gold. That's like a very common misconception. And so people don't fundamentally understand not only how big it is, but how these things work under the surface. What if we were to go back to, thinking about the monetary system in layers, what is the actual way that our financial system works? Like from the ground up, what is this all standing on top of, really?
A couple things. It stands on good debt, and it stands on being able to use things as collateral. So good debt is how money gets created. So a bank lends money to a corporation, the corporation borrows that money, spends it out into the economy, and then generates return enough to pay back the loan. So credit creation is what underpins the economy. This can be thought of in an isolated way, both within a fiat world and outside of a fiat world. In a fiat world, of course, you can provide credit and create dollars out of thin air and have those dollars circulate. That's what a bank license allows you to do in the United States. But in a non fiat world, you can still create credit for yourself through mechanisms such as hiring somebody and promising to pay them at the end of the month.
Hmm.
Even that itself is a form of credit. And so the system works off of credit creation, the ability to pay back debt, and then the second one is collateral, which good debt can be used as collateral, but also real things can be used as collateral, such as land, such as property, such as factories, such as gold, and such as Bitcoin. Real items can be leveraged to generate credit money, liquidity, and then that money can flow. So it really is trust, if you want to boil it down, because it's trust that I can create money out of thin air and that you'll pay it back. And it's trust that this collateral is good enough for you to lend me money against it. You like the asset, so you trust in it. And that's how I'm able to extract liquidity. And so in my second book, Bitcoin Age, the thesis is that Bitcoin and the dollar coexist because Bitcoin isn't a credit instrument. It's not a credit system either. And so it doesn't facilitate, hey, let me hire you and pay you at the end of the month. You can pay them in Bitcoin at the end of the month. You can pay them in dollars at the end of the month, or you can pay them in rations at the end of the month. Doesn't matter what point in history that we're in or what corner of the planet. Credit and trust is really what makes the economy work.
And just to keep setting the foundation, why has it worked so far, even if some would disagree that it's never really worked? And what's changed that's making it where we have to find a different solution?
Yeah. So, has it worked so far, and why has it worked? Well, I would say look around. And do you think that the world that we're living in is built up with capital and the ability to produce more, or are we limited by not having enough capital, not having enough factories, cars, airplanes, cargo ships? And I would argue that we are not limited by capital. So that as a planet, we've done a good job of building up capital for ourselves. So I would say that it's worked.
Mm-hmm.
Why might we need a new system? I don't actually think we need a new system. I think people need something that helps them anchor their wealth a little bit better and with less counterparty risk, because having all your wealth in a piece of property that is subject to a jurisdiction, or having all your wealth in a shiny object, or having it all in future government obligations, or having it all in technology equity that may or may not ever pay a dividend. These all have their own risk components. They all have merit. I think owning real estate has merit. Owning US technology equities has merit. Owning gold has merit. So I think the system needed another piece to the puzzle. That's Bitcoin really fits that brilliantly, but it doesn't replace a credit system, and it isn't what we need to replace what we have today. If people critique the current credit system for creating booms and busts, and that those booms and busts create more wealth inequality, that they trigger banker bailouts, that they don't punish bad behavior, moral hazard, I think all of that is fair and accurate. But suggesting that we can go about our ways without a credit system in general, I think is insufficient in today's world, 2026, the way that the world works.
So if I were to reflect that back to you, most Bitcoiners, when they really take the orange pill, think, okay, this is the replacement. We are actively fighting the system and looking to supplant it in a sense. And what I would take your position to be is actually, we don't need to replace everything. We just need the appropriate counterbalance to anchor it to something that's got the properties that appropriately cover the gaps that are left in a infinite credit system, essentially.
Completely agree. You have to spec out how, let's say, an AI revolution would unfold. Building data centers around the world, getting nuclear reactors back up online, building gas turbines and doing behind the meter electricity generation for AI compute. Let's really spec out how that happens without banks, IPOs, investment grade bonds, money market funds, payment operators, dollar rails, reserves, treasury issuance, and then a treasury general account held at the Fed that allows treasury debt raises to be funneled through the rest of the economy via the reserve and the banking system. I mean, let's really design a system that goes away from this. And nobody has written that book, Beau. That's what I've found. People might want to, as we say in sports, play hero ball, but unless you have an actual shot at the green around this tree, how can you even design the hero shot? And so, I'm looking forward to that day when someone presents to me a cohesive argument for how we can have a whole Bitcoin denominated system or credit system and how that works. I actually have ideas myself on how Bitcoin credit gets, into the system, but it's not with Bitcoin. It's actually with a credit version of Bitcoin that trades at a discount to par Bitcoin. And in that way, you could have more than 21 million Bitcoin circulating, but the BTC is capped and the credit Bitcoin is uncapped, and the market awards a discounted price to the credit Bitcoin because it's not real Bitcoin. Even that is not a pure Bitcoin system, but that is a starting point to actually get money circulating in Bitcoin denominated terms or in loosely denominated terms. So it's such an incomplete proposition to say that we're going to use Bitcoin to fix the system. Dude, how? uh, you know, walk me through walk me through how Nvidia, Taiwan Semi, Anthropic, SpaceX, and Google and Amazon are going to accomplish what they're doing today without dollar banking, investment grade bond markets that are dollar denominated.
So, taking the practical position, I would love to know, because it's, to me, just a great intellectual exercise to understand how these dynamics work together, how they might have some kind of cohesive overlap that doesn't just blow everything up or leave a significant gap in how a better version of this working is. But for the individual who finds this really dense, it's just like, I like Bitcoin. I think Bitcoin's a great asset. How would you describe to someone who's taking the journey to really learn the mechanics, why it's useful to think about the system in layers? What does that actually impute to you as an individual, an entrepreneur, a business owner, in terms of value or a better way of navigating the world?
It's a very rare and special asset. And Bitcoin is rare because of its 21 million cap. And the 21 million cap is fixed because of its special properties. Those special properties have to do with cryptography and with proof of work mining. And so to really get Bitcoin, you do have to see that more of it can't be created and that the amount that is created is quite fixed, slow moving, and decentralized. Once you see that, then you can say, yeah, Bitcoin is special. It's a collectible. I want one of those. And gold, I think gold is a good analogy because of the layer one money. People, you know, people like gold jewelry. They like things that are embellished with gold, and women like gold. And certain cultures like gold more than others too. So when you tell people, "Hey, it's like gold," they say, "Okay, well, what makes gold special?" Well, people like it. It's pretty, and it doesn't tarnish. And so these are the properties that make gold special and unique. And so Bitcoin has its own unique and special properties. It makes it more strictly rare than gold, and it also has a beauty to it that you can't see unless you see how it works. So I think Bitcoin is beautiful. I think it's elegant. And these are adjectives that you wouldn't even think to come up with if you hadn't seen the protocol for how it works and what's going on in it. It's very elegant in its design. Well, gold might look elegant around a woman's neck or on her ears, but that elegance in gold is easily visible.
Hmm.
In the short term, you can see it. And in the long term, you won't even be able to see that it doesn't tarnish until you wait around. Well, humans have waited around to see if gold tarnishes for 5,000 years, and it hasn't. So it actually becomes more special over time. And then people fight wars about it. And then they go and try to find new continents for it. And that's how gold evolved over thousands of years. And if people don't see the elegance and the beauty of Bitcoin and the similarities to gold, then they just won't be able to participate from that perspective. I was just having a conversation. The reason that nobody wants to buy Bitcoin when it's down is because they don't understand it. They want to buy it when it's going up because there's returns, there's money to be made. But when it's going down, there is no cash flow and there's no understanding of what it is. So how would you get a person that doesn't understand it to buy it when it's low because it's cheap? Because they won't think of it as cheap. They'll just think of it as worthless.
In the end state, or whatever we want to call, intermediate, far out decades into the future, do you think that it is viable and a good thing for Bitcoin to become the base layer, not just a component of it. Because right now, I would argue, I mean, real estate and gold are kind of the most monetized and debt assets out there. But gold hasn't been a great base, and I don't think anybody would argue that it is the base. But do you think Bitcoin can fully fill those shoes, or that we're always going to have some sort of mix at the base layer?
It's a great question. I think it gets out into the uh, beyond 10-year realm. And so it makes it very difficult to project. But I see a mix. I really do. I think gold, real estate, and Bitcoin all have a role to play. And, maybe one day everything is priced in Bitcoin terms, and we get to that point where the the base layer denomination in people's mind is Bitcoin. I don't think that all of a sudden we're going to be revaluing the world in ounces of gold, and you can't revalue the world in terms of property because every property is different, every jurisdiction is different. So of the three, Bitcoin actually has the best chance. And some people, when they're listening to me, they might say, "Oh, he sounds like a Bitcoin bear." Actually, I'm not a bear. I'm quite the bull. But in my, Bayesian way of thinking, the way that I was trained also is that you set probabilities. And after you set your probabilities, you're extreme on one side and you're extreme on the other. The outcome is so different from each other. But you still have to then create a present value or expected future value from that distribution and then invest accordingly. So in my distribution, probability distribution, Bitcoin becoming the global base layer currency that everything in the world is denominated in, and that the FX market works not through the USD cross around the world, but through a BTC cross. And that's what anchors global currencies and therefore commodity markets and therefore the rest of capital markets, global trade, even the denomination of credit creation. That's like, not only is it a non-zero probability to me, but it's somewhere in this like 5 to 25% probability over the next 10 to 20 years. That is super high. That's like insanely high, because I think of myself as an odds maker. So when my wife asks me, "Hey, what are the odds that," and she knows I like to play this game, so because she knows I'm the odd, so she goes, and my daughter will say it too now. "What are the odds, Daddy?" So they'll say, "What are the odds that we can get ice cream tonight as a family?" Okay, if I answer 60%, that's really high. You have to understand, like, that's me saying it's more likely than not. And actually, a lot of things would have to go bad for us to not get ice cream as a family tonight. But I don't say 90 because it's not close to a lock. Like, I might have work, I might have, something might go late. And so I can't say 90, but I can say 60. In that similar, sorry to bring up my, ice cream example here, but it's popular during the summer. It's like, what are the odds we're getting ice cream tonight, right? Summer mode, everyone's in summer mode. But what are the odds Bitcoin becomes the global currency? Man, if the odds are 15, 20%, do you understand what the present expected future value is, or the expected future value is today of a coin that might be the global currency in 10 to 20 years? It's like probably in the 40 trillion to $100 trillion range of market cap. That's $2 to $5 million per Bitcoin. So that's a 30 to 100x from here. That's the asymmetry that investors face in every asset class all the time. What is the distribution? What is the probability distribution? What's your base case? what's your bull case and what's your bear case. And then you can't split the way that you behave. I guess you can if you have a portfolio and you want to put some in this basket or that basket. But if you're asking me yes or no for Bitcoin, this is the way to answer it. It's probably yes. So why wouldn't you own it? And if the chance of it going to zero is 10%, then that's a 90% chance it doesn't go to zero. And you have to act accordingly too.
I think the ice cream analogy is actually really helpful, especially when you're talking about things that are so deeply interconnected in our world that most people don't understand, that are filled with jargon. Whether you're talking about the existing financial system or Bitcoin, there's so much jargon that makes it hard to even navigate decision making, just because you're spending so much mental energy understanding what am I even looking at. So as much as you can simplify to simple analogies, I think it actually helps people a lot with decision making and getting much clearer separating signal from noise. Have you ever felt like you've done everything right, built the business, made smart investments, and yet there's still one piece missing? If you're someone who believes in Bitcoin but hasn't yet explored mining, let me introduce you to something that most people never even realize exists, and that is fully managed Bitcoin mining with Abundant Mines. We help high net worth individuals like you own industrial grade mining infrastructure without ever touching the machines. It's hands free, professionally hosted, and designed to generate passive income by turning electricity into Bitcoin every single day. It's tax advantaged, it's asset backed, and for many of our clients, it's become one of the smartest moves that they've ever made in their investing career. So if you're ready to take the next step into real Bitcoin ownership, not just holding, but producing it at a discount, visit abundantminds.com. That's abundantminds.com, and see why this strategy is changing the game for serious investors. And I do want to ask you another question that's going to absolutely make people mad at you, since you asked me to do that. Do you actually think, because you're looking, I mean, you've got a very wide view of not just the whole market, but everything going on in the world, across debt, across AI and energy, computing, just all of these mega trends. So this is a mostly Bitcoin listener focused podcast. Do you think Bitcoin's even the most important trend going on right now? And I say right
No,
now, relatively, like, 1 to 10 years.
no, it's not anymore. Because human flourishing and human progress is is the number one trend. Actually, someone asked me about this recently. Here's the way I would put the two, why they're both important. The AI revolution that's going on right now has the ability to lift humanity up, to make us all smarter, wealthier, happier. Essentially, it has that ability. Not that it will, but that's the vibe right now. It's the wave going on. Is that people are optimistic about this. Bitcoin is important because it allows people to secure their property on a sovereign basis, and it allows them to preserve any wealth that they've created in the world. So 5 years ago, 10 years ago, the necessity for something to protect our rights was the most important trend. Now, the world has something that actually can lift the world up. Now, that's the most important trend. It doesn't mean that you don't need Bitcoin. You actually still need it to the same degree. You actually need it no matter how good the world is going or how bad the world is going. You need Bitcoin. And I think that is part of what makes Bitcoin very unique. But you can just look at the market action over the last 12 months, and you can see where the energy is, where the capital is flowing. It's flowing to this other idea. And AI is more important than Bitcoin right now if you were to make me choose, because this planet needs help. We need better productivity. We need better capital. We need more sustainable debt ratios. We need lower interest burdens. We need a path to wealth and success and growth and human flourishing. And AI and robotics might, I wouldn't say might, they're the most promising of the lot today and going back 20 years. But more than the internet, actually, in some ways. But the internet, a very democratizing force on the planet, and allowed people to generate more production with the same amount of time. So more production and more ability to generate wealth is the most important thing right now. And then Bitcoin steps into its role as helping us preserve our rights alongside that. So it doesn't make Bitcoin unimportant, but you asked the question, so I had to answer it.
I mean, I love the answer. And I tend to agree, honestly, as much as that's a challenging thing to say when you're fully exposed, giving, all of your time and energy to this space specifically. It does really land for me that as critically important as this is, it feels much more like working on the foundation of something than actually working on the house itself. And it feels like there's quite a bit going on in the market that is actively working on putting a roof over our heads, but it would all be useless if we didn't have something other than a foundation of sand to build it upon. Do you think that's a fair characterization?
Yes, and you need to be able to survive as a species. So if the AI wave and robotics helps us survive as a species, then that's what we need to focus on. And Bitcoin is a savings technology. You can't flourish as a society without investment, and savings and investment are opposite sides of the coin. That's economics 101. S equals I. What you don't invest, you save, and what you don't save is by default invested. So we need investment. We need a tool to save. We also need to invest, or else depreciation takes over, and things do crumble physically. Like the bridges will fall down, and the fiber optic cable will stop firing, and the copper wire will rust, and then you don't have anything anymore. So we do need to produce. And this whole survivalist Bitcoin approach, it doesn't work. It doesn't work forever. And the thesis also doesn't actually work at all, because Bitcoin doesn't help. It doesn't help anybody produce. It helps those that are saving in it save and preserve wealth, but it doesn't help on aggregate production at all. And so you need to move in and out of savings in order to do that. And so that's why Bitcoin is a great retail technology. It allows anybody to stack sats and save up, and they don't have to worry about, oh, I'm saving, so I'm negatively impacting the world's ability to produce, and so it's all my fault. I'm as the saver. No, that's not what I'm saying at all. Actually, the existing stock of dollar banking liabilities to the tune of hundreds of trillions of dollars that's never made its way into Bitcoin and has never owned it. That's the capital that is not going into Bitcoin right now. It's focused on production.
So what I really love about you is you have a great way of outlining how a system works, like very broad scale impacts and then second order effects of different ways that we design and interact with the systems that govern our lives. But I would also imagine that individuals come to you asking for just your advice on what they should do personally. So where does your perspective on what's most useful for humanity as a whole differ from the individual allocation advice that you would say give to somebody without, giving percentages, but maybe like
Yeah.
rank order? How do you tell someone who's thinking like, what do I even do in this kind of
Yeah.
market? How do I think about
Uh,
this personally?
I won't give you or anybody any specific investment advice, but I will give numbers because, I have a buddy, so I can tell you what I told him. Um, I think that young people, and when I say young, this means that you don't have children yet or you have young children, that young people should essentially be 100% invested. And of that 100%, it should be US stocks and Bitcoin. And the Bitcoin allocation can be as high as 30% for people that maybe don't even know that much about it. That's very aggressive, and that's what I told my buddy, because if I'm wrong, I know he's not going to come hunt me down. He's an educated individual, and he'll make his own decisions. He also has a wife and two young children, so if he's listening to me as his only investment advice, he's not doing his job as a man. So I say all this to say, my advice to people is very consistent with what I believe, which is that we are in an AI revolution. We are in a continued period of American excellence. The American innovative and entrepreneurship, American innovation and American entrepreneurship and American property rights combined to be still the triple crown of this capitalistic world that we live in. There is nobody even close. China bulls are they're dreaming about something that isn't real.
Hmm.
It doesn't mean China isn't making things. They're actually doing a great job making a lot of things, and some innovations are coming out of there as well. But where did the Chinese students go to study? They come here. Half of my students are Chinese nationals. Why? Why are no Americans going to study in China? Why is the global capital influx into AI happening essentially 100% in US companies? Why are they still trying to move here? And so, this China fantasy is not based in reality. And this triple crown that I speak of, innovation and entrepreneurship and property rights in the United States, it's not getting weaker, it's getting stronger.
Hmm.
That might be an opinion, but also I base my opinions in capital flows too. So if you look at the capital flows, Google just issued 80 billion of equity, SpaceX 75 billion, and Nvidia borrowing 40 billion in the investment grade market. All of them were over bid, and to the tune of like exceptionally large multiples. So the demand for US innovation, entrepreneurship, and property rights remains paramount. And also, the stock market bottomed in 2009 at 600 on the S&P 500. It's at 8,000 today, just about. And that's not that long of a time. And so my favorite one, Beau, is the weak treasury auction guy. That's my favorite guy out there. This is the quickest way to spot a fraud. An auction goes bad, a 20-year treasury auction has like weak demand. And then treasury auction guy pops out of nowhere and says, "See, this is the decline of the United States and the United States fiscal position, I've been hearing Treasury auction guy for 15 years have no idea what he's talking about. So all of you people out there, beware of Treasury auction guy. He is selling you a fantasy. He doesn't go back and check, because if he did, he would see that the last 3 auctions were great and that one maybe went weak. He also might see that for 3 years, interest rates have been stable in the United States with some fluctuation. The dollar has gone stronger over this last year. The amount of capital flowing into the United States. I mean, my other favorite guy with Treasury auction guy is divest from American assets guy. That guy is hilarious because in what part of the world are they divesting from US dollar assets? So I can't remember your question anymore, so I'm sorry.
we got to your buddy has 30% in Bitcoin. What's he doing with the other 70%?
US equities. Well, that's what I told him. I said, "Hey, do you have any like bonds or cash?" And he basically said, "No. My guy has a little bit of this and that, but I'm basically 90% in equities." I go, "Of that 90%, a third of it should be in Bitcoin." And so it's like, take your US equity allocation, reduce it and buy Bitcoin. Don't reduce it to buy bonds, don't reduce it to buy gold. Reduce it to invest in your own business or your family, but don't put it in anything conservative like bonds or cash. You don't need that. And if you don't have Bitcoin, you are selling yourself short of potential future returns.
And within that US equity slice, I mean, any thematic overweighting that you would advise them, or just, hey, go buy the S&P, like that's your simple ticket to the promised land?
Generically, yes, go buy the S&P, and for that weighting, that's something that we're working at the Bitcoin layer a lot on, and we're starting to offer that type of research to our clients.
So that's actually a good time. I mean, this is a lot for anybody to digest. There's no way that you can get a full map of the world in an hour-long podcast. What do you do day to day to keep people up to date on not just what's going on, but how to make decisions amid what's going on?
You develop a framework. I think that helps people. So we have our TBL liquidity framework, and it helps people understand over a longer term, is liquidity supportive or not? Right now it is. On a short term, is liquidity supportive or not? That fluctuates every 4 to 12 weeks. We have our proprietary indicator that we send out to people when it fluctuates. And if they don't like math, they just get one word, buy or sell. And that's great for people because they're like, oh, TBL has a sell right now on their liquidity indicator. That means it's probably not a good time to put new money into Bitcoin, versus if it's a buy, it is. And our track record is pretty good. It doesn't go back that far in terms of when we've actually been on the clock, but we've back tested it and it's working pretty well going back a few years. So we try to help people with that. If people are new to this field, I try to get them to read Layered Money. That helps them understand how, Lynn Alden has one of the great titles in Broken Money. People will understand how money is broken in many ways, and how it evolved. And if you don't want to call it broken, you can call it layered, and you can then choose which layer you want to be on, or you can at least be aware that the layer that you are currently on means this and it doesn't mean that. It gives people a little bit of context. So those are a couple of the places I start. But then uh some of the other places, turn off the television. That's a good place to start, because that can be really destructive. really, really, really destructive. I read Wall Street Journal and Bloomberg every day, but I don't tell people to do that because that's actually dangerous because you might ingest things that are wrong. I'm able to like have a filter where I can like actively reject what they're trying to push on me all the time. Like I read an article. Oh my goodness. I saw an Economist article. I didn't read it because I don't read that publication. They're too extreme. The article said everyone thought that tariffs would ruin the American economy, but it actually hasn't. So we studied why, and what we came out with was that without tariffs, it would have been way better. I was like, are you it's really difficult to get good information and to get good guidance because I wrote an article 24 hours after Liberation Day saying this probably helps the United States in a strategic position for the next couple years, and that I endorse this regardless of what happens in the. And then you had people saying we're going into a dark ages because of this.
Hmm.
So you know, I call out Dark Ages guy, this treasury auction guy. There's Dark Ages guy that I mention him on almost every chance I get because you have to protect yourself from Dark Ages guy because if you didn't, you would just be scared the whole time. I don't want people to be scared. So one of the things I'm doing more shows on AI where the punchline is, hey, please try to push the limit, get out of the single chat window and try to build something, try to experiment, see what you can innovate, push the limit. Here's, I'm sure you know the gentleman, Peter McCormick. Pete is a good friend of mine. I had Pete on my show and he screen shared his entire AI agentic build out with like 50 AI agents running his whole podcast. And he screen shared it for everyone. And I haven't released the episode yet, but what am I trying to do? I'm trying to do stuff like that, instead of like, oh, look at this treasury auction that missed. Maybe the world is leaving US capital and we should be aware and buy gold or even buy Bitcoin because the treasury auction was weak. It's insanity. Actually, it doesn't even work on an empirical basis. When the treasury market is experiencing weakness, Bitcoin goes down and in a bad way. That's baked into TBL liquidity, which uses bond volatility and interest rates as an inverse influence on the Bitcoin price and the stock market. I also recommend books that people read. Turn your screen off. Buy a paper book and read it. This is Dr. Santostasi's book on the power law. It's a big one. And I didn't buy you can see I've started it. I didn't buy the ebook. I don't, I don't do audiobooks. That's, personal share here. But I'd like to slowly devour information myself and then use my brain to think about it and then act accordingly. And yeah, I write every Monday. I do a paywalled video for our subscribers every Thursday. I tweet. The tweets are, Twitter's for bangers. So if you guys are on that website, please don't take my tweets as any sort of real take or as advice. I'm basically trying to make you laugh with my tweets. Or count your blessings because gratitude is important too. So I'll pause there, Beau.
Well, I want to just plus one that layered money was very impactful for me. And I think you can tell the impact of a work not just by if you like it, but how much you give it to other people because you want to share it. And I've gifted layered money, at least in the top three most gifted Bitcoin books that I give to somebody that's just like, where do I even start? One, because it's a great way of understanding how things work. Two, it's very digestible. It's not, a tome. It's not 500 pages of academic writing, and it makes it very accessible. So anybody not just for yourself, but for somebody who you're trying to get to understand why do we spend so much time thinking about this industry, that is a great place to go in. We'll make sure to link TBL as well in the show notes so that people can see what you write as well as see the data that you share and have access to that. What I wanted to ask you, because you hit on something I think is super important, is there's so much fear nowadays. I mean, many people are just paralyzed with fear of how to navigate the world, how to navigate investments. And you already said it, it does you such a disservice to live from that place. And I would ask, if someone understood what you understand, what of their fears would just evaporate first? Like how does seeing the world the way that you do remove a sense of fear?
Well, that's tough because the world itself is very scary. Life is hard, and that's kind of, I think, why it's tough is because life is hard. It's not easy. You don't coast through life. Life always has challenges, and so if life is tough, then how do you just drop the fear of like investing in things and all that? That makes it very difficult. So I don't have a great answer for that on how to drop the fear. Find optimists out there, I guess. Try to view the world with an optimistic lens, because then you can look at Jensen Huang or Elon Musk and celebrate their success and innovation, as opposed to being mad that one is a trillionaire and the other has a earnings valuation, a PE ratio that you feel is historically too high. Like, people get really mad about high PE ratios. I don't know why. Maybe just don't buy the stock if you think it's too expensive, but there's like a real anger about this is all a bubble, you know. So I I don't have an easy answer for here's how you shed the fear. Try to put optimistic glasses on when reading about world events or what's going on. Listen to entrepreneurs, because I think that if you listen to interviews with founders or read their work or read their books, then what you're doing is you're tapping into optimism, because a founder is by definition optimistic that they can turn a profit in the future. And if they're optimistic they can turn a profit, they see an opportunity. If they see an opportunity, there's some optimism baked into the cake there in general. So listen to entrepreneurs. Why the hell are these people starting businesses? They must have some angle on it. They must, and it's not that they're all right. Maybe most of them fail, but some of them will succeed, and the ones that did saw something and benefited from it. Also, the world nominally is growing, right? The fact that prices continue to rise across things that we need and things that we depend on, like real estate and things like that. This is all evidence that the world is inflating. The source of the inflation can be a debate. Is it all money printing? Is it all fiscal deficit? Is it bank credit? Is it actual production and an active economy? Well, it is a mix of all of these things, but the price levels are all going up. It means that the circulation is quickening, or
Hmm.
that it is circulating. It's not people hoarding, sitting on their hands, money tucked in, stuffed under the mattress. So we do not live in a money stuffed under the mattress world. And maybe the first step is people waking up to that.
Hmm.
People do not keep their money under the mattress. They actually are trying to invest it. And what are they trying to invest in? Lots of different things. So, um, basic economics. Thomas Sowell history, reading history, World War One and World War II history. This is a different type of history, but like the world that we live in many ways was formed by the world wars, and how we went into one, came out, never really came out. If you've done your reading, you could see that it just kind of went quiet for a little bit, and then it came back. How the Allies won the war. Like, I'm obsessed with Turing and the U-boats right now. Just with the history that I'm reading. So it's a long-winded answer. Turn the TV off first step, go from there.
Last question for you before we sign off. We spend a lot of time, the company's name's Abundant Minds, so we think about abundance quite a bit. I'd say it's a core value, it's a mission, it's a way of looking at the world. And after spending so many years studying the architecture of global money, when you step back from charts, models, geopolitical story du jour, what do you think is the biggest challenge facing society in overcoming scarcity and living in a future of abundance? And how do we get over it?
Wow, that's a very good question. Probably cooperation. There's so much divide on how people think that the world should work today. And so the more cooperation, the better. I actually love bilateral international relations versus globalism, because in bilateral talks, more action can be carried out, more decisions can be made. In a big room of United Nations, everyone's just talking over each other. No one's actually listening. Half the people think one thing, the other half think another thing. It's a stupid way to progress. It might be a great way to keep the peace, but that peacekeeping and progress are not the same objective. And so if your objective is progress, like you said, abundance, if your objective is abundance, get two countries in a room, make a deal, comparative advantage here and there, and let's grow together. And let's repeat that over and over and over again. So I, inside the United States, the political divide is very wide. We can all admit that. But once you get outside of domestic politics and you get into more of an international realm, there has been a lot of momentum for the United States over the last couple of years in bilateral deals. So when the politics swings back to the other side, can we see some of that international cooperation continuing? Can that bridge the political divide in the United States? Maybe, maybe not. I'm optimistic in general as a person, but that doesn't make me rush to conclude, hey, we're going to have a closing political gap in the United States, and that AOC and JD Vance will run on the same ticket in 2028, and all will be kumbaya. So I'm not naive, and I'm not blindly optimistic, but cooperation, not even like a resolution to domestic politics, but on a global scale, more teamwork, more win-wins.
I think that's a great message. Nik, I just want to say again, I think you are and you provide some of the highest quality information and signal that people can, if you don't have many hours or many days on end to unpack the way that the world is structured and made up on your own, taking your word for it is actually a pretty, and not just your word for it, but you've got some pretty great source data, is a great place for people to spend time. I know that I've gotten a lot of value out of what you produce and share with people. For those who want to keep up with what you're working on, where can they keep up with you on social? How can they get access to Bitcoin Layer? I think you have like a free version of some of the data that you share as well. Just how can people get more involved in your work and keep up with you?
Yeah, I'll throw a bunch of links out there. You can start at thebitcoinlayer.com. And that has everything that we're doing: my books, our show, the newsletter, the data terminal, which is called TBL Pulse. So you can catch everything at thebitcoinlayer.com. If you want to go straight to the data, research.thebitcoinlayer.com, and you can start for free. If you want to start reading, thebitcoinlayer.substack.com, and join us for free there. We got a weekly letter and a research letter that goes out multiple times per week for those that want to subscribe. But there are a bunch of ways that you can get started for free. I do shows and interviews. That's a good way for me to bounce ideas off of others, also to get some of that optimism. I tend to get optimists on the program so that we can have chats about the future. I don't have to get everyone that I agree on, but it's always good to have these sort of two-way conversations. So a bunch of places to start free. And if you like it, join us.
Love it. Well, Nik, it has been an honor to have you on. This is a personal bucket list item that I'm so happy to have fulfilled. And just really appreciate you sharing your time. And I think anybody listening to this, there was some very thought provoking, challenging answers to questions that would make anybody reconsider how locked in they might be to their beliefs. And I think always re-examining your closely held assumptions that you don't even know that you have is one of the best ways to remove fear, understand what we're navigating a lot better, and really just have a lot more self-assuredness and empowerment in working through life. So I appreciate you sharing. This has been super fun.
Thanks. Listen, I'm not a stoic. I'm not a monk. I'm not a priest. I don't necessarily try to be any of these things. I'm just an analyst. I am a teacher, and so I analyze, I teach, and that's how I find my niche in this world.
Well, thanks for teaching our audience, and look forward to the next time we can have you on.
Thanks, Beau. Appreciate it.